Well, we're watching the Delta variant, and it's certainly still on the rise. And what does that mean for travel stocks? Names like Expedia. Let's go through the latest earnings report and come up with some ideas here. James Hardiman's with us, Managing Director, Equity Research and Leisure at Wedbush Securities. And on the phone, Dan Wasiolek, Senior Equity Analyst over at Morningstar. Glad you're both with us. So I'll start with you, James, as we take a look here. The stock is certainly under pressure. What are you learning when you break down the numbers?
Yeah, I think the hope, if not just within the last week or so, but if you look back at the past few months, we had seen a steady progression of improvement in booking trends versus 2019, which is, I think, the most relevant benchmark. And then when we got into July, and we're hearing this from a lot of travel companies, things in some instances took a pause, improvement took a pause. In some instances, we kicked it into reverse for a little bit here. That was absolutely what Expedia talked about last night. And so a month that was potentially going to be an inflection point, right, where we were able to surpass 2019 levels, instead moved in the wrong direction. And I think most companies are attributing that to the Delta variant. That is particularly a big deal because July is the last data point that we have, and it was moving in the wrong direction. And so do things from here in August, September get better, or do they continue that downward slope? I think that's the question that a lot of investors are struggling with today.
Yeah, and Dan, are you hearing the same sort of questions? Is there any clarity?
Yeah, I mean, Expedia stock, in addition to kind of the concerns around the Delta variant, I think it's down a little bit today because there's probably some expectation that the results for the second quarter might have been a little bit stronger after Pure Booking Holdings had a really solid report and improvement in their second quarter results. But I guess what we've seen in the U.S. data, hotel data at least, is looking kind of back at the past surges in the 2020 year, where after July 4th holiday, after Labor Day holiday, and after the Thanksgiving holiday, there was kind of this pause in travel activity, but then there was a resumption. And what that kind of told us at the time is that there's definitely this desire to travel, and that, you know, maybe there is a pause when there is some surges. But we still think that there's improvement ahead here. We're encouraged with the data we're seeing out of the UK. The UK is opening up their economy, while their cases have increased. And encouragingly, we're starting to see the case count go down there. So, the data through July, at least the hotel U.S. data, has been pretty resilient. We know that there's some near-term uncertainty, but overall, we're still kind of in the optimistic camp that the improvement's going to return maybe after a pause here.
Right, and we have so many names in this group, Dan and James, and we take a look here. James, you tell me, we just showed TripAdvisor, Trip.com, Airbnb, Expedia, Booking, just to name a few. Are any of them buys or strong buys? And if not, are there any in the group? Is it airlines or cruise lines if you expend it out?
Sure. For me, I mean, Expedia is the best name in that peer group, and I think today's sell-off is probably overdone. To Dan's point, I think the United States is likely to be a lot more resilient than the rest of the world. Expedia has an outsized exposure here. Additionally, what's pretty evident is that alternative accommodations, right, house rentals and the like, are certainly outperforming traditional accommodations by a pretty wide margin. And Expedia also has significant exposure there. Obviously, the 800-pound gorilla in the alternative accommodation space is Airbnb, and so I'm sure when they report here soon, we're going to see some pretty robust trends. The only thing that gives me pause there is valuation, but I do think Expedia is still a good combination of fundamental improvement, but also reasonable valuation.
Right, and that's the difference. And just to clarify, James, I mean, it's down 7% today. Do you think it can get that 7% back and then some?
Absolutely do. Yeah, I mean, we're basically back to where we were a couple of days ago.
Do you have a target?
Yeah, our target is actually 185. So that came down a little bit, but certainly continue to have a bullish view there.
Right. Okay. And Dan, what do you think? I mean, are there buys in the group? And if
Yeah,
so, which ones do
I
you
would
like?
agree with James. We as a company, we definitely like Expedia. We definitely like their positioning. Their Vrbo vacation rental platform is an area of strength, as is the U.S. exposure that they have. Our discounted cash flow model currently gives it a fair value price target of 151. So we see it kind of more in the fairly value camp or fully valued. A name that we probably would gravitate toward here would be Booking Holdings. I mean, in addition to having kind of a strong quarter, we do think that travel is going to continue to broaden out. We've seen some encouraging data points that Europe really started to pick up in the month of June. That would behoove and benefit Booking Holdings, which, a lot of people don't realize also has a pretty strong alternative accommodations platform in Europe. And then I would agree with James, Airbnb, a great company, but we struggle with the valuation.
I see. What a great conversation. Love having you both on here today, bringing on the pros. James Hardiman, Managing Director, Equity Research and Leisure, Wedbush Securities on the phone there. Dan Wasiolek, and Senior Equity Analyst over at Morningstar. Thank you both